Time to get in a global exclusive on the show. Joining us, Praveen has come down to Mumbai right now, visiting us from New York. John, thanks a lot for your time joining us on this show today. Talk to us about how are you analyzing the markets right now, the positives and negatives. We have people from both the sides right now analyzing market. Which is the side you are taking right now?
Ajay, as always, it's a pleasure to be on your show. So the Indian market has had a very, very solid first half of 2017. Market is up about 20% compared to, say, about 16% gains for the emerging market index, about 8% gains for the developed markets. But then you have to put that in the context of the fact that last year, in 2016, Indian market was up only about 2% compared to about 8 and 9% gains for the emerging markets and for the developed markets. So there is a little bit of a catch-up for the Indian market, which is reflected in what has happened in the first half of 2017. So now we have to look forward. Looking forward, I think there are some positives and there are also some negatives, and which ones are going to weigh more strongly will determine what happens to the market in the short term. By short term, I mean in the next 3 months. I think the long-term bull story for India remains very much intact, but in the short term, there may be there is a possibility of a consolidation. There is a possibility of some market being in the trading range. But as for, and coming back to your question about the valuation, I mean, clearly the market is expensive. The PE multiples are well above long-term averages. But then so are the PE multiples in most markets. The markets are, because most markets, whether it is the US or the developed markets or the other emerging markets, all markets are expensive because the P's have risen, the E's have not caught up. So the PE multiples in all markets have risen, and India is probably risen a little more.
John, you mentioned the GST, and how do you see that materially changing things for equity markets? I mean, today, for instance, if you were to look at what went down, ITC, because of the GST cheer being short-lived, really was in a tailspin. But overall, there's also nervousness that that could show up in corporate earnings. Take, for example, Unilever today, where the volumes clearly were impacted because of destocking ahead of the GST rollout. So, how are you looking at the likely impact in the months to come?
Yeah. So the GST itself is very, very positive in the sense that over the longer term, it is probably going to bring a lot of the unorganized sector into the organized sector. It will probably give a good boost to GDP growth and also to the government's fiscal revenues. So that's positive. But in the short term, it's a bit of a wild card. Let me put it that way, because what could happen is that the impact of the implementation that could lead to some negative impact upon earnings. Also, there's one other phenomenon in the US. We call it as throwing everything into the kitchen sink, where what companies do is that they use an issue, some event, to kind of throw a lot of negative things that are already on the company earning stream. So what could happen is that the corporates might use the GST as an excuse to try to put some of their bad stuff out, and then we might probably see some earnings disappointments in the short term. But again, it's a wild card. It might not happen. We might have an earnings upside surprise, which should probably be positive for the market.
Structurally, how is the FII community analyzing markets right now? The community you represent, when you talk to people in your own community, other fellow fund managers who are looking at India, who are running money here, what are the kind of themes they are looking at adding into on falls?
The themes have not really changed that much. The big theme has always been the India consumer story. And then that particular consumer story is also probably getting a boost in the short term from two factors. I mean, it's a longer term theme, but then on the short, in the short term, the fact that you are having very good monsoons, if you have a good monsoons, then it will be positive for rural incomes. So that is positive for the consumer sector. And then more recently, we had the 7th Pay Commission payouts to the government employees, which is probably also going to continue to provide some support for consumer spending. So the consumer story in the short is good in the longer term as also in the short term. Then in the other themes that we are looking for is clearly the infrastructure story, the development of infrastructure, roads, highways, and then now the more recently the affordable housing. So some of those themes are probably what we are looking for, and therefore the sectors that are geared to the infrastructure spending and to affordable housing sectors like the materials are probably what are in favor with the FIIs.
So if you were to take the long-term view, John, say from a 3 to even 5-year perspective, how do you see, Indian trade pan out versus, say, the rest of the emerging markets? Will the outperformance from India continue?
So if you're comparing, let me first answer the question about India in an absolute sense and then in a relative to some of the other markets. So in an absolute sense, I think that what markets have been impressed about is the political stability that we have seen for the last couple of years, and the strong commitment of the current government towards reforms, and the progress that they have done on some of the key reform measures like the GST and all of that. Looking ahead, okay, for the next 2 years, then markets seem to have expectations that in the next elections the current regime will come back to power and will pursue the reforms. If there is any disappointment on that front, in the sense that there is a little bit of political instability, or if the current government decides to, in the interest of the concerns about in the interest of the next elections, trades off reforms for populist measures, then there may be some disappointments in the market among foreign investors. Now, comparing India to other emerging markets, I think that India is still in a very, very positive, compares very positively and favorably. So if you look at some of the other big markets, China has its own problems, especially with the big leverage and the government trying to control leverage in the financial system, and that is one. In the case of some of the other big countries, Brazil had a very, very good year last year. There was a lot of euphoria regarding reforms, but all of that came to a standstill because of the corruption scandal of the President Temer. So the reforms have been sidetracked, or at least for now. So that's a negative for Brazil. Russia again had a good year last year, but then it is again dependent very much upon oil prices and also upon sanctions. It does not look like the sanctions are likely to be lifted anytime soon.
Large part of the rally so far is also attributed to the Modi wave, the feel-good sentiment on reforms which Modi government has led so far. But as we go into 2019, do you see any risk because of that? What if the market does not get the kind of outcome in 2019 elections as they are hoping for? Are we at risk of any kind, and if yes, what could be the quantum of the fall in the market?
Well, markets are pricing in a very positive outcome, and probably some of the run-up is in the market is probably based on that forward expectation. So if that does not happen, then as long as if there is some kind of political stability, if there is another party that comes to power which with a good majority and is able to have a working majority, and almost everybody is committed to reform. So if there is political stability then I think that the correction will probably be small. But if we have a situation like what happened in 1996, where there was political instability, and then you had first the Deve Gowda government, and then you had the Chandrasekhar government, and then the Gujarat government. We had about 3 governments in 2 years. If that kind of political instability will probably lead to a bigger correction. That's probably, if that is avoided, then we will probably have a small correction, but not a very big correction.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/ETNow.